record this. I'm doing good. Hope you are doing good as well. I was just telling everyone, I got a lot of requests over time how I use the MMT tool, which is basically an order flow tool, similar to like Excel charts and stuff like that. But, this one has been a beast. So I am doing this recording to show how I'm incorporating it in my system. So during this stream, the goal is to explain that. Welcome, Ned, as well. I'm doing good. Hope you are well as well. If there during the stream are any questions that arise, just ask them, and then I can directly answer them. Yeah, it is recorded, so at least it should be recording now, so you can watch it back as well. First of all, it's important. I don't know if you guys already have the MMT, but it is free to use. So I've also made a template, which is basically just the template I have. But if you guys want, you can just go to your MMT, go to layouts, and then in community, if you search for DDT, then you should be able to directly copy everything. So then you can see every, just use the same, and it should be directly copied, so then every indicator and every thing here should be directly on the chart as well. So let me know if you can find it, and then you can basically directly copy everything. And second of all, very important that this is all secondary, because a lot of people think that if you that this is some magic stuff, that if you master this, that you can directly trade. But for more than what I experienced myself, is that you should first really focus on just the naked charts and master the technical analysis, and then later use this just as little Confluence. But you will see a lot of order flow and a lot of tools and everything, and it seems like it's the magic thing you are missing, but that is just an illusion. More times than not, it's just secondary. So I also only use it as an extra Confluence to my already trading ideas, and that is that, like, I'm a range trader, so what I always want to see is like ranges. So for example, right now on BTC, I'm watching this range with range high and then range low, and then I want to wait for high probability zones. So this is a range, but I also scalp, so we also have ranges on like the low time frame. But right now I show it like this range, this higher time frame range, where we have like tap 1 at the high, tap 1 at the low, and then I know already mid-range is a low probability area. So the only area where I want to look for bigger trades, and which is a higher probability zone, is if we take out the lows or the highs. And then in this case, this is only the tap 2 and tap 2 of the low. Like the higher probability is always a Y-curve, which consists out of 3 taps. So let's say you take out the low right here, then you come up, and then you come back. Then this is like your third tap, and that is the highest probability level I always like to do business. That can be on a high time frame range. It can also be on the 1 minute, for example, which I'm doing a lot more lately. But it all comes down to the same principle, where we have a range and we watch for the 3 taps. So tap 1, tap 2, tap 3, and then this is like the main PY, which I'm looking at. And the other PY is like the second tap, which is basically a sweep of your low or of your high. And that is where I'm gonna incorporate MMT. So a lot of people, they start with order flow and they directly go zoom in and they think, oh, there are sellers right here and buyers right here. That's true, but that does not show you anything else as the normal chart. How I use it is to look for PYs, so your range high, range low, as always, or look for super high probability supply or demand zones. So let's say you have like a clean uptrend with higher highs, higher lows, and then price breaks aggressively back to bearish, where this is your bearish break of structure basically, then this is your created supply. Then if price retraces into that supply, also with structure, you can say like this is your POI, and then this is where I want to look for reactions. And that is basically where I start to look at MMT at the order flow, because that's an extra Confluence. But don't start looking at random places for Confluences or anything. It's just an addition to your already existing strategy, which is always to wait for your POIs and not do stupid stuff in the middle. That's first of all, so it's not a magic trick, it's just an additional tool, and don't blindly believe that this is what's gonna make you profitable out of a sudden. Welcome, by the way, Tiger and Barcode. Good to see you guys. Okay, so then we can start. I'm not gonna go too deep into it, otherwise we are going. It will be hours long, and nobody is has time for that, I think. So what I have, if you copy my thing, you will have liquidation heat map. I don't use it that often, but it basically shows you just where is liquidity. The brighter it gets, the more liquidity there is. As here you can see, this is our range, which I just showed, range high, range low. Where is the most liquidity? As usual, it's above your range high. So the brighter it gets, the more liquidity is. So there's a lot of liquidity above the current high, and then below there's also quite a lot of liquidity. And then you see here below these lows, which was last week, last Monday's low, also a lot of liquidity. So it basically shows where more liquidity is, and the more liquidity there is, the higher probability area it is. Because in between, you can see already this is like there's not a lot of liquidity there. So that's a level where you don't want to position yourself. Usually, and that's also why I use the order flow, is that you as a trader, and especially if you are more into low time frame, but also on high time frame, you want to position where other people position themselves as well, because that are high probability areas where you can look for reversals. So that's liquidation heat map. Don't use that often. The TPO is one I use a lot, and which I also share a lot. It basically it shows you from each day the volume profile. So if we zoom in, for example, today, and then normally you have a volume, so depending on the volume, your volume profile gets filled. But on the TPO chart, it's a bit different, because this is on the time that price is spent at a certain level. That shows you the profile. So the POC is the time, is the level where most, if I zoom in, it becomes a bit more clear. Like this is the POC, and normally on a normal chart you would expect that that is the level where the most volume has been traded. However, with a TPO chart, it is the level where the most time is spent. So this is where the most time is spent, this is where the least time is spent, and this is where the least time is spent. Besides that, it's not the way I use it is you should use your TPO on the 30-minute, and then look at your TPOs, or at your naked point of controls. So for example, right here, you have this naked point of control. And if you copy my thing, you will have the same. Otherwise you have to enable that all in the settings right here. So I think it's just easy to copy my stuff. I see a question from Barcode. How do you spot fixed range volume profile? Range high and low? Yeah, a normal chart is just, if I pull the range, it's not really order flow type. But indeed, if this is my range high to low, then I just want to see the volume profile of that range. If this is my range, then I pull it from that high to like here. And then do not extend it. But this is different from a volume profile. This is like TPO, so it's time based as well. But it's not too interesting to use it right now. How I use it is that this is like a naked daily point of control. So that means that it's a point of control that was not tested before. So as you can see right here, you also have the POCs, but price likes to retest those levels and then go higher. Then it means that there's like fair value, and then it can continue, which is like healthy for the market. And sometimes it just leaves the level, and then you have a naked point of control, which is basically this red line, and then this red line. And those actually, they act as magnets. So doesn't mean price has to go there, but sooner or later price is likely to go there. So if you have it locally above your level or like below, then if it's below, it acts as demand or like support. If price comes into it, you can expect it to get reactions from it. And if it's above you, it's acting like a magnet, but also where you reject from. Beside that, the TPO is just more of a Confluence. And the biggest thing are the single prints. So single prints are kind of like fair value gaps in the chart. So here you also have like gaps. For example, here you see here quickly that this is a gap. But on the TPO chart, it's only on the 30-minute, and it's where price traveled but left gaps behind. And on a TPO chart, on the 30-minute, in my chart, it's located in green, are like single prints, and the market does not love to have single prints. So they are super strong magnets. So that's what I use most of the TPO chart. If it's below price, it's a magnet to tap into and get reactions from. And it's above price, it's also a magnet. And then price often likes to fill it and then go lower. So we have still from last week some single prints below, right here, which is also a POI. And then locally, you can see that market is pretty like good range. There's not a lot of imbalances. So locally, the TPO is not that interesting right now. Besides lower, where we have those single prints and those naked point of controls. Then this is just the normal chart we all know. And then what I use also on my charts here, but on MMT it's a bit better, is just VWAP and VWAP. This is weekly VWAP, the bigger one. So that's your weekly trend, basically. So from Monday, you see that it has been support till today, where we are now below it. So that means that locally the trend is changing. It's just an easy way to see what is the trend of the market. And institutions use VWAPs a lot. So they often see the trend and then they buy. They have just algorithms that buy on each step. So right here we see that we held it, more or less, tapped it, there wicked it and went higher. And right now trend is changing. And that is like on the weekly, and on the lower time frame you also have like the session one, which is of the daily. And that is also basically the same. It's like if price is above it, then locally you are more bullish. If you are below it, then you are more bearish. But that's not nothing too special. Intraday levels also not special. It's just daily high and stuff. It's also what I usually have on my normal chart. And now it gets to the more interesting stuff, which are the volume bubbles. It says volume bubbles, but here you see it's delta, so you can put it on volume, and then it's based on volume, and delta is based on delta. Delta basically shows you the market orders. So if you, like yesterday, a lot of delta happened here. So if we zoom in, you can actually see like 46 million positive delta, 55 million positive delta, 32 negative delta, and then here also like a lot of delta. And it basically shows you how many market orders there are. So if you like delta is just, if you have positive delta, then you have more market buys than market sells. So here we have 46 million positive delta, which means that if you have all the market buys and take out all the negative sells from it, all the market sells, then you are left with 46 million positive market buying. And what I use, how I use it, is to simply look, do I have a clean POI where I want to see a reaction from? So let's say we have the range right here, and we have tab 1 at the high, tab 1 at the low, and price travels towards the highs. You always want to do business where other people are likely to get trapped. So that's why we don't trade mid-range in general, because that's a level where a lot of people just get trapped. We want to trade the extremes where other people are getting trapped. People are just stupid. People long the range highs and short the range lows. That's just how people work. And that is where I would, for example, really love to see delta pick up. So let's say this was the range high. Then you will often see that directly at the range high, a lot of people start market longing, purely because they feel emotions. They think, oh, we're going to break out, let me market slam those market orders. And then they get into market order positions, which are aggressive, like FOMO buys. It's also institutions and stuff, but mostly you should just think it's the stupid money going market long right there. And if you then get your move higher and then get a market structure break while having a lot of positive buying in that upper candle, then you know that they are underwater, and then you get that cascade lower. The same is for the range lows. If you are at the range lows, you can assume that people are just stupid and they just almost always short range lows. And if you then see a lot of buying, a lot of selling, with price not going lower, it also tells you that they are positioning short. In general, with this tool, you can just see they long the top and they usually short the lows. And what it tells you as well is if you have, like here for example, if you have a lot of market buying, but price is not going higher, what does it show you? It shows you that the market is trying to push higher, but it is not going higher, and therefore someone is absorbing all those market buys. And that someone is often the market maker, the big player. So if you have what did we have here? 46. Let's zoom out a little. Here, 61 million, and then there a few. Let's say you have 100 million of buying here, market buys. Then you would expect price to shoot higher. But if it does not shoot higher after 100 million market orders, then someone is withholding the price right here. And that is a sign that someone is absorbing the price here, which is exactly what we expect or wanted to see at our extremes. So at the range low, we want to see bullish absorption, and at the highs, we want to see bearish absorption. Is the screen frozen, or is it only... No, it is okay. And the sound is also still working? Sounds good, all good. Okay, great. Let's see. Caesar, green bubbles means market maker going short. No. Green bubbles means market buying. And red candles means market selling. And what we want to look at is that retail, so stupid money, goes market order. So green bubble, we want to see basically green bubbles at the highs and red bubbles at the lows. Because that means that a lot of people are expecting higher, but they get absorbed and then they get lower. So today, for example, my short was based on that as well. If we look here, today like you can draw ranges on any time frame. Like today we also had a range where, yes, let's see, yeah, right here. So we had a lot of delta here, and this shows me a lot of bubbles. This shows me that there's a lot of action happened there. So a lot of buying and selling, and that's already where I know, okay, that's pretty interesting, because I want to do business where other people do business as well. Like if you don't have any bubbles, like here, this is usually not a place where I like to get involved, because that can just be very choppy. I want to get involved where other people are getting trapped. So I knew that here a lot of action happened, right here, which if you are very locally looking was a local 1, 2, 3 local distribution, and price came down, and then I knew, okay, if we take out this high again, then I'm super interested in what will happen. And there we had this wick, which was also in supply. So I had supply marked out, what was it, right here, anything. So like this, it came into that supply, and there I was watching what is price doing. And there I saw like delta, this lowest one is delta, big up spike in delta. So then I can also look here, okay, what is happening? A lot of buying happening while price went shot into supply. And that is this move. So this shows that a lot of market orders came into this level, but price did not manage to exceed the supply. Which means that someone is absorbing all those market orders and pushing price down. Well, who wants to absorb the market? That's always the market maker. So then for me it's a sign, okay, that is a good indication of market maker stepping in here. And then it's just the usual, what I always want to see is like, give me the 3 tap to give the distribution. So this is step 1, this is step 2. Price came up later, again with some market orders in it. Then we broke price back to bearish right here. Bearish bulls. And this was the reason why I took the short on the retrace anywhere around here, and then target lower. And then you can also know, like if here a lot of green bubbles came in, that means that a lot of people longed right here. What will happen if they get underwater? Then those positions get wiped out, because people go long, for example here, and they put their stop loss as close as possible, because people are just greedy motherfuckers. And the moment price goes lower, right here, they get taken out, and then you get that cascade lower, which is the case here. Oh, you guys only see the I've been in trading view quite a while. So all the ranges I showed and all the drawings were not visible. Okay. Let me share. My entire screen. Let's see. Okay, now you guys should be able to see it. I've been drawing work, yeah. Okay, so I was basically telling, like, this was the local distribution first. Then this was where a lot of delta happened. This was the step 2, where a lot of aggressive buying came in, which is this level. And this is where the highs show that there's a lot of market buying, so you would expect price to go higher. If it does not do that, it shows that someone is absorbing price here. And then we can combine it with our general knowledge about the depth 1, 2, 3. And in the moment those people are vulnerable to get underwater, we can take the short, taking out all that liquidity. And that is also like last week where we took the long. Right at the start of the week. So it's basically here we had the weekend. During the weekend we had this SFP and then that bearish break, and then this was on Monday where we had like aggressive selling. So aggressive selling going into this level. Let's see, this was 12th of April. So if we go to the 12th of April, yeah, like here. And here you see aggressive selling. So this is downtrend, and then here aggressive selling, also negative delta right here. At that low, and if you zoom in more, it will also occur at these levels. I have it at 50 million, so like if I put it lower, you will see them more often. But at these lows, you can see here 28 million sell volume, market sells. Right here we have, it doesn't show, but it's also around 20 million, for example. Here we have 20 million, like a lot of selling happening at the lows. But what is price doing? It's not going lower. So let's go back right here. Like a lot of selling. This is step 1, so you never know if this is your range or not. But at step 2, like here a lot of selling. Then this is step 1, so 50, let's say 50 million market sells. Price bounces from it, so it already shows someone is buying here, otherwise price would just continue lower. Someone has to buy, otherwise we go lower. Then on the second tab, which is right here, you again have a lot of negative delta, but price pushing higher again. Therefore, again, showing someone is absorbing price action. And combining that with our knowledge about Wyckoff, and especially if you have like 2 tabs and then get a reaction again, they know, okay, someone is absorbing here. And then we can look for that third tab, as always. And then the third tab, basically the same happened. We absorbed here, and then we came back here, and then we just had to execute or like look at structure, just basically low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, break, and then we started the uptrend. But in general, you want to look at negative delta at the lows and positive delta at the highs. Combine that with the tab 1, tab 2, tab 3, and you have like a lot of confluence. And you will always see that, like in general here, people buy the highs and sell the lows, like here. At the low, negative delta at the low, positive delta at the high. Negative delta at the low, negative delta, here near the high is positive delta. It's basically a way to see what is the general people doing. And then if price does not go higher after positive delta, then you can think, okay, are they getting trapped? If they are getting trapped while forming your second tab, or preferably your third tab, and you get local market structure confirmation, then it's a clean short, because all those people will get rinsed once they are in a loss. Is there a lag time on the order from day, or is that to the minute? It's almost instant. There's like, you can watch, like here, I can watch on 1 second. Then you also see like the buying and selling. So this is like on the pure on the delta. So usually when I have like a range, I already know, like I don't want to trade in the middle, because that's where you get trapped. And then the only way, like today, why I was interested in this short was because I saw that there was a lot of buying, a lot of delta, or like a lot of bubbles. And that shows, okay, there's a lot of positioning. And then I also am more interested to participate. And then here below, we have the other indicators, which is basically open interest. Basically shows you how many positions are being opened. Leverage positions, so either longs or shorts. So I don't know exactly who it is. But this is also like a little thing. You want to get into trades where action is happening. Like if you have, if you're in the middle of the range and open interest is also just slowly, then if you enter, you know that you can be in a choppy position, which can take hours or days to be in. While if you wait for the range high to be hit, let's say this was the range high, with open interest going higher, likely longs to be opened, and then you see the reaction from that level, they go down. Then the lower ones are basically the cumulative volume delta, so how much is there more buying or selling, and you can go into very deep into it with divergences and stuff. I don't use it that way. The only way I use it is that I have CVD right here and below. This one is leverage, so these are the perps, and the one below is spot buying. So how I use it is to see, is there a divergence between spot, which is the low one, or perps, which is this one. If you see, for example, a new high being made with perps pushing higher, while spot is not going higher, then it shows you that people are longing the move while spot is going lower. And an easy rule of thumb is that spot buying is like the real money, and perp buying is fake money, because that's landed money, while spot has to be used with real money. So you want to see spot, if you have a bullish move, you want to see that be supported by spot buying. Like for example, like now we go very, very locally, but let's look if we can find a little example. Like you see that spot and perps are pretty much in line right here. But let's say here, perps are a little bit more aggressive. But let's say spot is just super flat here. Then you know that this one is pushed by perps, and then you should know, okay, that's not to be trusted. You want to see spot lead. And we also have some positive delta, so there's a more buying right here, market buying than market selling. Then you can watch, okay, what is the local trend? Well, I see like we have low, lower high, lower low, lower high. Most likely is to continue your current trend. And then you can start using confluences, like are we in a clean POI? Now in this case not. Is the move spot driven or perp driven? Now it's more perp driven. Let's say this is a clean POI. Okay, we have perps leading, we are in supply lower high territory, and we have let's say a lot of green bubbles in this high. So as we can see here, we have positive delta. Okay, 1 + 1 + 1. I'm gonna bet on trend continuation, which is for me enough to take a short. I'm not gonna do that, but for example, and then you can use it as a confluence to your trading. But you can make it as difficult as you want, but in essence you want to see in your POI, which for me is always like extreme premium levels. So here is where I wanted to look for shorts, and this is where I wanted to look for longs. And if you see people position themselves differently, so this is where I want to long and this is where I want to short, just in general always. So if I see that right here we take the lows, and this is where I see a lot of negative delta come in, either the red bubbles or big negative delta right here, and I don't see price going lower but going higher, breaking internal structure, then I already know, okay, this is likely or like a good +1 for an accumulation in the making. Then my third tab has my highest priority, and then I want to look for rotations. The same is true if we go first to the range high, make tab 2 with a lot of positive buying, so heavy positive delta, and price go back down again. And this is already where I know, okay, all the people that bought this breakout, expecting it to be a range breakout, are now underwater. This can already be like a potential deviation for a move back down. However, this is the second tab. We always like to trade the third tab. So then I know, okay, maybe if we come back up here and then see the weakness, that is my third tab, short, trap all these buyers right here, and then you can get those cascades lower. So you basically always want to look just for confluences. Like, do you have, for example, right here, we have like a poor high above. It's not, poor high is not really interesting, but let's say it was a POC. Then you can also watch for, okay, how does price come into that daily POC? Then it's a level where you can expect a bounce from. If in that level you get a lot of sellers, a lot of negative delta, but price fails to go lower. And a rule for myself is always, you always want structure. Even if it's on a 1 minute, confirm a rotation. So like today, where we had the short, which was basically this 1, 2, 3 model 2 distribution, where a lot of buying happened here, then buyers got trapped right here. Then you still want to get the structure confirmation. So here a lot of people got trapped. Then locally you broke structure already right here. So this was already the confirmation that this could be the high. Now you can watch how does price come into the potential third tab. That's right here, and then boom. So this is your second bearish boss. So we have bearish boss 1 of tab 2, bearish boss of tab 3, and then combining that with all those buyers that bought in this move right here. They bought, we're directly underwater, so they think, oh shit, do I survive? And here they think, oh yeah, I am in a winning position, let me open even more. And in the moment here you get your structure confirmation, you know that all the buyers here are likely trapped in their position, while a big player is selling or absorbing price action. And then you can expect, and if you combine it with like just your normal chart, you can see where is the liquidity located. And then here you get those full rotations. And that's basically the same, like last week we had crazy trades, but each time like this right here. This was, for example, the local range. Let's go back in time, where we had tab 1, and very locally tab 2, also here tab 1 at the highs. Basically this was the local range, and then this was the potential tab 3 for a deviation move. let's see, this was 15 April. And I can already tell you that 15 April, that low that was made, which is here, I took that also based on the Confluence here. 15, yeah, that was here. So I have to go lower. 15, yeah, so this was step 1, step 2, step 3. Right now there's no delta. But step 1, sellers, step 2, sellers. And then here, also a lot of sellers. But price, like here, negative delta. And then this 1, 2, I've waited for step 3 POI. Always step 3 is legendary. But this is where you want to see buyers step in. And you have a very little room for error because you know that the deviation threshold is basically, you don't want to close below it. So this is where I look, okay, if this model is going to play out, it should be from here. Then you see that there's a big sell candle into the level. Also here, if you look locally, open interest going down, positions closing, spot selling, perp selling, and negative delta. Then you should expect price to go lower. But what does it do? It did not went lower. Instead, even on a very, very local time frame, it showed A1, 2, 3, aka a 3 drive, which just shows absorption. This is like the most simple way to look at it, at the 3 drives, is absorption compared to this. So then here we broke back to bullish. This was where I longed. Stop can below your third tap. And then this is like that little extra confluence where I knew, okay, at the lows we have absorption, absorption there, absorption here. A little extra confluence to know, or to dare to take a long right here. While normally I would not have done it, especially because we had like supply right here. So then I would have waited for that supply to be flipped, which eventually would have also worked. But this was like another example of combining your third tap with a clean POI, a level you have to see buyers step in, and then they also do it, and then you see that eventually that played out. And then scalping becomes more fun because the ranges, they are everywhere. You can look at them at every time frame basically, and then just see where do other people get trapped. And you can expect people to get trapped always at highs, imported highs and imported lows. And it's almost always the range high and range low. So now we are going towards the range low again. Then that's where a lot of people get trapped often. If we see that with the order flow, it's like that little extra confluence to take a trade. And normally I always have these all on. Now it looks like a big mess, but on the 5 minute, like this one can go away. Like today as well, we had that model 2. I took the profits already, but then we had the push higher during New York, which was basically this one. That would have been a pretty clean short again, because look, a lot of selling occurred in that candle. And like the delta, it's not always that because market makers also execute with market orders. So this, for example, was a market order, but this was in between where price was already. So this is likely just a market maker willing to push price down because he was likely in that model 2 distribution. And his target was not yet hit, so once price came back into it or bounced, he probably slammed market down again. So the market maker also executes with market orders, but he does it at points where it makes sense. Retail will top long breakouts and bottom short breakdowns, and that's where you want to see like is retail going in the wrong direction, yes or no, and then you can position against them. Right now it looks pretty bearish, where we are going down. You have local structure going down, and the only reason or way where I would like right now, I know I'm only interested if we go to the range lows. But let's say you get a new range formation, like let's say this is potentially tap 1 and this is your local range, and then price starts to go sideways a bit like this, and then we take the low where negative delta heavily increases, but price comes back up, and then again a lot of selling. Then I will look at price. Oh. Well, let's ignore this. And I see at the low like a lot of negative delta, so a lot of negative bubbles appear. Then I already know, okay, what is happening right here? We see a lot of market selling, but we are not going down. Could this be potentially a POI to look for longs? And then especially if we do like this is like almost textbook. Tap 2, go higher, tap 3, then you can look for longs. So it's just a confluence to know where is a clean POI and where not. And almost always you can just use that, watch it with normal charts as well. Because now I can already tell you with great certainty that we're gonna go probably take out the range lows or the range highs. Now I think range low is more likely. But that's where the new higher probability trades come up. And likely also the level where, if we look at the order flow, I'm 100% sure that the moment we get to the range low, this is where we're gonna see a lot of negative delta appear. So then you see negative bubbles, you see likely big negative delta right here as well, and maybe even open interest going up, meaning new positions are being opened. If you are at the lows, you can also assume that it are shorts. If open interest goes up near the lows, it's almost always shorts, and near the highs, it's almost always longs. So you can basically just always assume that people are always on the wrong side with trading. They always short the bottom and long the highs. And with this tool, we just can see with a bit more certainty what they are doing and where they are doing it, and then position ourselves in that way. So it might seem like a lot of like very difficult, but if we just ignore like a TPO, it's a little confluence, but that's the one that looks most difficult. But just zoom out and only watch and see where is a higher probability area to look for trades. Only today was already right here. A lot of action happened here. So then you know, okay, why is there a lot of action happening right here? Then if you take out that high, for example, then you know, okay, a lot of action happened there. If we go to that level or take it out, maybe we get more action again. And that's actually what happened today. We swept that level, came back down, and then here again, a lot of action. They can ask yourself, who is this? Is this market? Is this a market maker likely, or is this retail shorting all of a sudden? This is probably a market maker who probably already was shorting it here as well. Let's see if we have some heavy bubbles at super obvious places. Yeah, like this is the ultimate range low we have, that naked low. Also like a lot of negative selling, price not going lower. This was being absorbed. And that absorption happened again at these levels. Like here, 68 million selling into the lows, 45 million selling into the lows, but price not going lower. Heavy negative delta. And that was eventually the low we have. Since then price has been pushing higher and higher. So yeah, if there are any questions, let me know. I can make it much harder and talk about a lot of different stuff, but in essence it will not help. Let's see. $3 billion short will get liquidated if BTC goes to 73.3. Yeah, and where does that align with? With the sweep of the range low. And liquidations, or shorts will get liquidated if BTC goes to 73. But it's longs will get liquidated then. Yeah, so yeah, longs. Yeah, and like what happens if a longs get liquidated? A long turns into a forced seller. So negative delta can also be longs that are getting liquidated, because a long, if it has to close, it turns into a sell. And then you can already know, like 73.3, once they get liquidated here, they will turn into forced sellers, aka negative delta. And it aligns with tab 1, tab 2, absorption. And the market maker already knows, okay, if we go here, there's like $3 billion in shorts getting liquidated, which is sell pressure starting at this level. Then they know, okay, if I want to go into big positions, this is a level where I can absorb them and build my long position. They're not gonna do that right here in the middle. So I can already, like, it would be funny if we exactly do that and go from here to the range low. Then I will share a post, and I'm 100% sure you get heavy negative delta into this low, and then we potentially get that accumulation, which I've been expecting, and then get the rotations higher. You're looking at other time frames as well. Why so often the 30-minute? The TPO, it's just based on the TPO. So this works around 30-minute candles. I'm not 100% sure why exactly 30 minutes, but that's just a rule I learned. If you're looking at the POCs and the TPO and the single prints, it has to be 30 minutes. Because if you go on other time frame, it will show you different levels. Like here, for example, on the 50-minute, I see like a naked point of control right here. But on the 30-minute, that one is not there. And the 30-minute is leading. So that's why I always watch for the 30-minute. Also here, like on the 5-minute, that's the current daily one. Thanks for your time and explanation. It's very useful. Have you ever used use moon. You mean the moon, like the just like full moon and stuff like that? No, I don't actively use it. It can work, and probably it works, but no, I don't use it. There are a lot of things that can work or cannot work, but you should not use every metric or every tool there is, in my opinion. Trading, you should keep it as simple as possible, and this is already pretty complicated, but this is all I need. But you can use the moon cycles, for example, together with this. Let's say you take out the range lows during a full moon or either blood moon or whatever. Then it can be reversed as well. Yeah, it's being recorded here, so I will upload it in the Discord as well. And you can do this for every coin basically. So maybe let's see if ETH has some, like here. Last week we had bullish single prints, so below price. They have now been filled. So this was, if I looked at the chart, this maybe I wanted to be long on ETH after that fill. What I also see is that above price we have a single print. This is a magnet. Market wants to eventually clear this. Then I already know, okay, for ETH, we had a good reaction from filling the lower single prints. Now we have one above, so that's a magnet. Then I know, okay, that already says to me more interesting. And I can watch, no, okay, not. Because open interest is literally doing nothing. So there's almost no positioning. So the chances that if I enter and I get into a chop is pretty big. So, okay, not really interested right here. And also the CVDs are pretty flat. So then let's go to ETH. It's very likely that that this is just chop, and then we have that gap which is around here. So sooner or later market will likely go there, but until I see either like a clean range, so the range I see right now is just this one, potential one, this 2 might already be in a model 2, but like locally it shows me that there's not really much positioning going on. Like open interest is flat, CVDs are flat, so there's not a lot of action. Then there's also not a super clean aggressive positioning, so not a lot of top longers or bottom sellers. So then I'm not super interested. Like if price, for example, let's say this is the new range, starts taking out this low, then I will be interested to trade it back to this single print. Right now it's likely to just chop around, but we can look if maybe it's hype. Okay, hype. Like I'm bearish on hype. Spot is actually buying while market is falling. Okay, so on the downside we have some daily POCs, one right here and one right there, but also above, one right there and one right there, and we have some single prints above. So from a TPO perspective, this is where I think I am mainly bearish right now, since this was, in my opinion, a distribution range. This is the breakdown, and I was looking for a lower high for a lower low. But now that I see that we have confluence of that potential retest with the single prints right here and the 2 daily point of controls, I even more like the idea to get into this level, fill the single prints, fill the daily point of control, and if you then get a structure confirmation, short it down all the way to these lower levels. You can also watch if we, for example, what happened at the highs. Because here we had a super clean distribution, 1, 2, 3. There was not really too much buying, it seems. Maybe I have to put this a little. No, like so. Normally you would see at these highs a lot of buying. That did not happen this time on the hype. But most often I mainly use it for BTC because BTC is the leader of the whole market. Let's see. If there are any questions, let me know. I can answer them right now. So in the meantime, watch. Because lately I've been taking a lot of scalps as well. 1. USDT, the dominance is quite helpful for the buyers. Yeah, true. I use dominance a lot. But you cannot use it for the order flow. So that's not part of this stream. Great stream, thanks a lot. Great to hear that. Your bubbles show volume in $1 million. How did you do that? On my chart there are only numbers about 1k, 2k. It can be the thing right here where I can put it on, you can put it on coin and then it's calculated in like the amount of coins. So here 468 Bitcoin. But if you put it on USD, then you see the USD value. I think that's it. Beside that, have you copied my template? Is everything else like similar? With like just the tools and stuff? Free version only allows 2 indicators. I thought they opened everything, but then that's not true. Four bet, I got 4. I have 4 indicators for free. Oh, it seems like it are 4.